Hello friends, in this video I'm going to cover three companies. First is DMART, second one is DIVI's Lab, and the third one is DIXON. There were a lot of comments related to these companies, whether we should sell these companies or hold. So I thought of making a video so that it helps you take the decision. So let's start. So first company is Avenue Supermart or DMART. If I look at its 1 year return, it's been in negative 15%. 5-year return, no problem at all, 192% returns. So anyone who has purchased this share before 5 years, they are not asking any questions because they are still sitting on a return of 192% on this share. The questions that are coming from the retail investors are mostly people who have recently invested in the company. And that's completely fine also, because when we see a stock which is there in our portfolio falling by 30-40%, naturally you get some jitters. So I hope this video will help you take the decision on whether you should buy this share or whether you should hold this company or whether you should sell it. So coming back to DMART again, and if I look at maximum return has been 458%, and this got listed in 2017. So in the period of 6 years, you see it has given a return of 458% to its shareholder. And now I'm at the quarterly numbers for DMART, and keep an eye on the sales. So for December 2022, sales were 11,569. And you can see an increase of 25% in the year-on-year sales. And if I look at the operating profit for December 2022 was 965, which in December 2021 was 866. So no problem in the sales and operating profit. In both the scenario, in terms of sales and in terms of profit, we are seeing a growth. Now why this company is down, that's a different thing, because in short term market works on a lot of things, mostly on the sentiments, mostly on the expectation. So the expectation of the market was something else which DMART was not able to fulfill. But does that mean that DMART has become a bad company? It is not growing its profit? Absolutely not, because you can see for yourself that the sales are continuously increasing. There was an increase of 25% in the sales number. And the main business of the company is to increase its sales, increase its profit, and not to meet the expectation of the market on quarter basis. And you must be already knowing the business of DMART. They follow business model which is similar to Walmart in US. And Mr. Radhakrishnan Damani, when he started DMART, before starting DMART, he worked in US in Walmart. He understood how the Walmart works, and then he replicated the same model in India. And if you'll go in any DMART store over the weekends, you will see whether their business is doing fine or not. Right now, this is also true that a lot of people are moving to e-commerce segment, wherein they prefer to order groceries online. But do remember that India is very big. These kind of things are mostly happening in tier 1, tier 2 or tier 3 cities, but there is still a major portion of the Indian population which does not prefer to order online. They still want to go into the stores and get discount and then buy things. DMART is trying to do that. DMART is trying to cover the entire India. Until now, they have not covered all the states. They still have a lot of area in India to cover. And it is not that DMART is not changing its business model. DMART is also moving towards e-commerce, wherein they are trying to focus on both the segment. One is the e-commerce segment, wherein you can order online, and the second one, which is their core segment, which is the direct retail. And the discount that DMART offers are unmatchable, which has been their USP or a moat or a competitive advantage, whatever you can say. But their business model is fantastic. And for the next 10 years, I don't think there's any problem with company's business. And even if there is a problem, we will be able to see it in the results. But do not worry too much about the quarterly results. And not only the quarterly results, do not even worry about a couple of year results sometimes, because sometimes there are possibility that even the yearly results are not that great. At that point of time, we need to find out whether there is an internal problem with the company or it is due to some external factor. The problem currently is inflation, because of which we are seeing low demand in all the areas. So it's a problem which is generic and not related to company specific. And now I'm at the yearly numbers, and in the sales you can see that the sales have increased. In the 12th trailing month, the sales are 41,000 crores, which was 30,000 crores in March 2022. And similarly, you will see an increase in the profit as well. The profit has increased from 1,745, which was in March 2021, to 3,605. So in the sales and as well as in the profit, you are seeing an increase, and a good increase. And the same you can see here as well. The profit compounding of the company has been fantastic, you can see. And similarly, the sales compounding has been also very good. In the 12th trailing month, the sales have shown a good improvement, and it is currently at 39%. And the stock CAGR also you can see is very good, 5 year 25, 3 year 15. In the last 1 year, we are seeing a dip. And now I'm at the shareholding pattern of this company, and you can see that the promoter still holds the same percentage. They are not selling their share. They have full confidence on their business. And FIs also invested in this company. Even FIs are not selling. And even DIs are there, they are increasing their stake, and you can see some bit of government involvement also, and the remaining is with public. So according to me, this is just a temporary phase. You should not be worried too much about the share falling. You should think of this as an opportunity to accumulate this share if you have conviction on this company's business, and if you think that this company is going to do well in future or in the coming 5 to 10 years also. Next company is DIXON, and if I look at 1 year return, it's a negative 36%. 5 year return are still amazing, 302%. That's why I keep repeating, invest for minimum 5 years, because during the period of 5 years, all this fluctuation, everything will be absorbed. And if I look at maximum return has been 422%. And here you can see that DIXON is one of the largest LED TV manufacturers in India, and it services more than 35% of India's requirement. So we'll not go too much into the detail, but the company business we all know is very good. It's into the business of manufacturing LEDs, mobile phones, lighting, LED TVs, and it do contract manufacturing wherein it manufactures for brands like Samsung, etc. So business is absolutely fine. There is nothing wrong with the business. It is a business which is also going to sustain in the future. And now I'm at the quarterly numbers for DIXON, and for this quarter there is a dip in the sales. So sales in this quarter was 2,405, wherein in December 2021 it was 3,000. And if I look at the profit for this quarter was 111, which was in the last quarter was 103. So in the operating profit there is an increase because of the OPM. So company's expenses have gone down even though their sales have not increased. That's why you are still seeing a better result in terms of profit. Now if I look at the yearly numbers, you'll see that sales are continuously growing. March 2020 it was 4,000, then 6,400, then 10,000, then 12,000. And similarly the profit 222, 292, 384 and 474. So if you look at the yearly numbers, you see that there is still an increase in the sales, still an increase in the profit. But if you look at the quarterly numbers, then there is a slight dip which we can see, which we know it is because of the inflation, because of low demand from the customer side. For this company also, if I would have been you, I will not think about selling this company, because still there is nothing wrong in the fundamentals of the company. It is just a temporary phase because of which some quarters you might see pressure in the results. But if your horizon is 5 years, 10 years, then this is a good company to hold. I don't see any problem in the company's business. And the same you can see in the return profile also. You can see the profit compounding has been beautiful. Similarly, sales compounding also has been very healthy. Return on equity is also about 20%, and CAGR is also very good. Only in the last 1 year you are seeing a pressure. And now I'm at the shareholding pattern for DIXON, and for DIXON you will see that still FIIs are holding this company, still DIs are holding this company, and promoter also have almost similar stake, which is around 34%. So nothing fundamentally has gone wrong with the company. If that would have been the case, then promoters, FIIs, DIs would have been the first people to get out of this company. They are still there, so you can take this as a positive sign that there is nothing fundamentally wrong with the company's business. And I know you have recently invested in this company, and that's why you are getting that question. But if your holding horizon is 5 years or more, then I don't think you have to worry too much. There is no need to sell this company at loss. If you don't want to add this company, then it is fine. But I think you should hold this company. You should not sell this company at a loss, and give this company some time to give you good returns. Now I'm at the chart pattern for DIVI's lab, and this is down by around 3.58% today. And if I look at 1 year, again a bloodbath, 33% down. And if I look at 5 year return, again everything looks green, 173% return. So same case here as well. Anyone who has invested 5 years ago, they are still chilling. They are still sitting at a massive return of 173%, even after company being down by 40%. And this company is involved in the manufacturing of active pharmaceutical ingredients, which are called APIs. APIs are nothing. These are powders which are used in different kind of medicines, because medicines are made of multiple components, multiple ingredients, and this company provides those ingredients to the pharmaceutical companies. And now I'm at the quarterly result for the company, and you can see that the sales are down by 31% in this quarter, and in the previous quarter also there was a downtrend. It was down by 6.69%. And company profit for this quarter is 408, which was in December quarter 2021 was 1097. Now a lot of people are confused about this company also. They are currently panicking in this company, which I don't think they should, because the downtrend that you're seeing in the sales is because there was a big base number during the COVID time. So before COVID they were doing normal business, and when COVID arrived there was an increase in the demand for their products, because of which there was an increase in the sales, because of which there was an increase in the profit. Now we all know COVID has gone down, and now they are going back to their normal BAU. But now what has happened is, whatever sales and profit increase was there because of the COVID, it is not there now, but the year on year comparison is being done by this figure, because of which you are seeing such a big dips here. But as and when company will move ahead, you will start seeing that company is going back to its normal BAU. So I don't think there is something drastically which has changed in this company that you should panic and sell this company. It's a good company, fundamentally strong company. It's a leader in its sector. This is just a rough phase, and this company is going to recover from this phase. Just hold this company for some time, give this company some time, give the management some time. is what my advice would be. But do not just follow what I'm saying. Please do your own research on all these 3 companies and do whatever you feel is right. If you feel that you need to sell the shares, sell it. If you feel that you need to hold it, then please hold it. If you feel that you should buy more because you have full conviction on the company's business, then you can accumulate more of these companies' share. But before closing, one last thing, that if you increase your horizon to minimum 5 years in a company, then all these ups and downs gets absorbed. You can see it in the chart pattern also. I've shown you the chart pattern for all these 3 companies for 5 years. And during those 5 years, there was COVID, there was Russia-Ukraine war, there was inflation, but still these companies are providing very good return above 150%. So the result of holding long term is in front of you, but the final call is definitely yours. So that's all in this video. If you liked the video, please hit the like button. This will motivate me to make more videos. And also, if you have any suggestion or if you want me to make a video on any specific topic, you can mention it in the comment section. And if you are new to this channel, do hit the subscribe button so that you can get regular update whenever there is a video uploaded. So bye for now. We'll meet in the next video with some new information. Thank you.